The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Monday morning there in the States, Monday night here in Asia. We're going to take a look immediately at the S&Ps here. We're going to take a look at what we talked about Friday, and we talked about the breadth on our grid here, on our daily grid. We're just going to go right into that. And as we look at our breadth situation, we always use this as somewhat of a barometer to try to gauge what's going on in the index itself, try to figure out if there's some disconnect or basically the internals of the marketplace. Internals of the marketplace not actually cooperating with the index itself. So as we talk about this, and as we looked at it last week and the week before and the week before, we were talking about passing on some of the long opportunities when it comes to, we've got a full office here tonight, guys, sorry about that. As we look at some of the trigger points on the S&Ps around those inflection points on the profiles on the index itself, we always kind of fall back on, is the breadth positive, negative? Should we be selling these rallies? Should we be buying dips? And as we have looked at these, traditionally speaking, we've kind of taken a look at the historicals and mapped those against the index itself and tried to figure out, is the leverage on the short side? So as we look at our daily, and I hope you guys can see this right now, as we look at our daily, we've been flip-flopping around for a good month or two or even three here, especially on our intermediate time frame that we look at. And as we look at what's happened recently, turning breadth negative on or around recent, the last time we turned around May 25th, we've been looking at areas to short. And what does that mean? As we go into the index itself, you might be saying, well, Logan, we're above profiles here. We've talked about that on our weekly. We're above profiles on our daily. If I can get my charts to snap back here. Above profiles on our daily, here's the situation on the June contract. So as we look at this, we've been trying to grab onto these 240 inflection points, unfair highs and unfair lows. And when we have a chance, like we did Friday, getting back down below 2100, and actually on the day before, rallying up into 2117 with the breadth being negative, we've said, hey, let's try to use this as a battle point to try to short instead of, buying the breakouts. We're looking on the upside, we're looking to sell resistance and short the breakdowns on the bottom part of inflection point. So as we're looking at this 2017 a couple of days ago, we rattled around, got back down below the 240 profiles around, let's just call it 2100 just to give it a neighborhood, retested a couple of times. And, what do you do with this now? Now the breadth is looking pretty scary, actually, for longs, because this is a very rare occurrence, to be honest with you, when we're this far above profiles on the daily and on the weekly and on the daily. This provides really good clear sight to look at the markets from the short side. All right. And again, we had to kind of move into those 240-minute time frames because we had nothing to try to base or pick our battles, around on the dailies or weeklies because the profiles are just not there. But we're not looking to buy dips now. As we look at the S&Ps, and let me go back to that on our heat map grid, I'm going to go into our weeklies and look at what's going on here. Weeklies have flipped over to negative. So on every time frame that we look at, 60s, 240, daily, and weekly, this is a kind of a momentous situation because it's given us a clue ahead of time that the market is extremely weak, even though we're still trading above profiles. we would not, in this instance, be looking to buy the dip anymore around the 63, 68 area. Now, if you've been watching this show, a lot of times, you know, we've come back and retested this area, kind of been in breakout modes. And again, we've got a lot of people in the office tonight still kind of cleaning up from the day. Yes, that's true, John Duenas. And so we excuse the traffic around here. We've been looking at these areas, the 68, 63 area, to buy because our breadth had continued to stay positive on the weekly. So when we come down to those major inflection points, we've got to just kind of keep turning the wrench the same way and look at those areas to buy. But now our weeklies have turned negative, our dailies have turned negative, our long-term and intermediate breadths have turned negative. So now if that stays negative and we come down into these 63, 68 areas, for instance, we're going to be passing on those support buy the dip type opportunities because the internals are telling us that's not the best idea in the world. All right. So that's kind of how we're looking at the S&Ps right now. All right. So another thing I want to take a look at that, you know, Eddie kind of touched on last week, and you know, I'd been talking to some guys over here about this, the ruble situation. You know, Eddie had just gotten back from Moscow, and he's kind of got his finger in a lot of different pies over there right now. But you know, the interest rate situation has not yet kind of come home to roost as far as that the economic situations that may turn ugly again over there, and really haven't turned anything but ugly. So as he was reminding us of this, we had the orange bar, and then we had the kind of the breakage of profile highs weekly. 53.13 just had a massive strong close, and at the same time 53.13, I'm going to go to our daily, we actually also got considerably above our weekly profiles. We got considerably above our daily profiles at 54.45. So now I think the smart play possibly would be on the ruble to let this, you know, hopefully we get a little bit of a kind of a retest of the breakout area from 53 and some change up into 54.5. That DMZ would be an area I'd be extremely interested in looking at longs in that particular spread of the daily and weekly unfair highs. We're going to take a look at the yen really quick because, you know, the Japanese economic numbers came out, and they're not as bad as they thought. They're actually not bad at all. But you know what it tells you? It tells you that the long-term view, this may be a blip on the screen for a while. The long-term view, as we've been kind of beating the table about this trade, is still the weakening yen, and the JPY USD cross is to go long. Now, the ultimate buy point on this, if it happens, is going to be 124.61 down below. That would be to patiently wait until we have a retest of those daily unfair highs. The thing I want to impress upon you is, you know, the weeklies, I mean, just there's no orange bars, there's no relaxing, there's nothing telling you to scale out of this right now. And that's pretty amazing, especially the news that came out. Here's the 240s. Again, we've retested the 124.92 area. This is amazing to not come off all-time highs hardly at all with some of the news that came out on Japan today. And that tells you, again, that there's not a lot of faith or conviction that those numbers are going to reverse anytime soon from, you know, the damnable shame that's called the Japanese economy. Let's look at the dollar really quick, just kind of get your week started here on some of the technicals. Here's the situation on the dollar. You know, I'm not exactly a huge fan of going short the dollar right now. So I'm looking for, we didn't get a close above that area. We fell below and had some technical damage yet. Top of the box, 97.88, excuse me, bottom of the box, 96.38, excuse me. And we haven't had a close above there. I'm still looking, a little bit of reversal today, but I'm still looking for this to power up the dollar, get back above 96.38, and then actually retest 97.88 up top. That's the U.S. dollar. Whew, let's take a look at the Shanghai. This is quite amazing. Not the best news out on the China economy either, but let's just, remind you that we talk about profiles all the time when we talk about breadth, all right? Because the Shanghai daily and weekly breadth on this pullback, just, case in point, May 29th, breadth stayed positive, super positive. That means it was okay to try to buy those upper inflection points on the profiles, and it almost hit it to the tick there. Now on the S&Ps, as we had talked about earlier, we're breadth rolling negative now, and we're not looking to buy those support areas based on that alone. We may get a little bit of a sympathy bounce around these things, but it's not something with the internals working the way they're working right now to be able to say, you know what, let's back the truck up and let's put more long-term investment capital into the S&Ps. That's not what you should be thinking right now, based on some of the technicals that we just spoke of. So the Shanghai, again, that's kind of unbelievable news. Slowdowns in the Shanghai just makes new all-time high again. Tells you a little bit of something there. And as we look at the daily, as we look at the weekly, this is the weekly on the Shanghai. Again, profiles appearing below a month and a half ago, very bullish, no indications, have not had any orange bars appear, no scale out opportunities really. The 240s on the Shanghai, this is the situation. Short-term traders could look to place stops below 5,000 right now. If buying support around 5,000 does not pan out. All right, so let's go down into, got about a minute left here before we get our first break. Let's look at gold. Gold is kind of drifted off a little bit farther than I thought it was going to do. Thank God we're not looking to buy gold right now. The only way to buy gold right now is to really have it stage through the regulator and get back above 1176 on the short term. Then that's going to be a short-term trading opportunity against a long-term trend down, or not long-term trend down, but just the technical damage that this thing has kind of gotten into on the downside. As you can see, we retested 1205 on the August contract, and nothing to hang on to down here on an intermediate or long-term basis. So if you must trade gold from the long side, you've got to look at those 240s and use those inflection points. And those opportunities on gold are without question sitting right here. The inflection points painted very clearly within the scanner on the August contract on gold. Okay, I'm going to get out of gold really quick. Hit silver. Ugh. Yeah. Here's the 240s on silver again in the scanner. Inflection points 1595 up top, 1615. Those are short-term levels. Using those as breakout opportunities on the upside on silver. We'll be right back, guys.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Glad you're joining us today. Got a kind of a unique situation happening. Had our weekly breath roll over to negative. Our price action on our index on the S&Ps, breadth being negative long-term, weekly, and daily, has been that way for a while actually, but breadth on the weekly turn negative is huge, considering a very unique situation that we've got price action above weekly profiles and daily profiles. It's a very rare opportunity that you get some lead-in situations like this. Last time we were breadth negative on our weekly, I believe, on the S&Ps was October last year. So you kind of got a situation here, as we would say. Let me just we flirted with it a little bit here, but let's just look at the date here on our charts. October 24th is when we had the crossover positive, and guess what? We are crossing negative here in June. Not a good sign, as the internals are rolling over. And you can't see this any other way if you don't put all these profiles together and spend a ton of money on Amazon servers to crunch all these things. Here's the situation on the daily. This is really getting not overdone on the imbalance, but right now you've got 231 stocks out of the S&P 500. 47% rounded off are clean and clear below profiles here on our intermediate. So again, how do you deal with this? We're going to go back to our S&Ps futures, that is, and we're going to pull those up. Looking at our charts here, if you guys are looking in the den, and we're going to have to use not the weekly and dailies inflection points here. The targets are that 63.68 area, 23.63, 20.68. Here's a 240. It's got a new profile appearing here now on the 240s, but in my opinion, you've got to look at very stingy stops above 2100 now. Selling 2100 still, that's going to be your kind of rallying point for the shorts. 2098 and the 2100. Just looking at the downside situation here, we could stay breadth negative on the daily and weekly, but you've got another leverage point up top around 2117. But again, I think I just, I might sit tight if we start breaking above 2100 on this, but you've got definitely a really good leverage point on the short side around 2100. So again, pulling this back up, we had really been focusing. I'm going to take a look at matching stocks only, stocks trading below profiles. Look at these sea of reds that we're getting here now. So again, some of the things that, again, we've been just kind of beating the table about some of the instruments. I mean, I was looking at Walmart, and where's Walmart? Actually, let me pull this up here. WNT. This is one we've really been focusing on. Really showed its hand early. Just want to kind of show you why that relative strength trading game. Relative strength trading meaning we're trying to find weak stocks in a market that just continues to drift around higher above profiles. Because if we do start turning breadth negative and do start caving in a little bit, the theory always is the stocks are already showing their hand as weak will hopefully fall a little bit faster than the ones that are showing strength, and vice versa on the long side. We've got a weak market in general. We want to try to find stocks that are hanging in there in case we get a turnaround. But we don't, always want to take the converse game. We want to try to find areas where the market is showing some cracks in the armor on the upside or reversals on the downside to try to pick those stocks out. And the scanner does a great kinds of sounds happening here tonight. The scanners is a great way to identify those things. And 74.39, the new breakdown point on Walmart. Where's the bottom? Again, I would let the profiles kind of regulate this trade down. I mean, things on the lows go lower. Here's the 240. So any breakages now back above 74.5. I mean, based on your appetite for risk, that's one area that I'm looking at for reversal. That's about another 1.5, 2 points or point and a half up. I'm not going to let this get away from me too bad because we could be at 76.50 in no time. So I'm going to, now that we've had the new breakdown, I'm going to try to regulate this a little more stingier than usual. Let's see here. All right, a couple other instruments that we've been beating the table about. Let's take a look at Weyerhaeuser WY. We're going to take a look at this right when we come back, because it's showing some areas of concern down here around weekly inflows, and we'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Just want to kind of restate some numbers here on the XLE and crude oil. We've kind of been looking at the XLE for a while as a little bit stronger than crude oil in general, but then we kind of had the weak connotations enter the energy sector internals. And again, here's the unfair lows, 79.11 on the weekly. This is our weekly charts. And we were talking about, this is kind of Custer's last stance for the XLE right now, and was showing some weakness relative to crude oil. But last week we kind of had retested, closed below retest, and guess what the high last week was? 79.11. So again, couldn't get through there. Again, no damage done. We wanted to wait until we got back above there to go long on any XLE situations. And taking a look at crude oil based on things going on with the crude oil market. Here's the daily situation. We talked last week, in fact, about waiting patiently until 57.40 was approached. And, if you got stopped out of that with a little bit of intraday noise, that's the way it goes. You got to get back in when we get back above inflection points if you're sitting in front of the desk there. So, again, what do you do with this now? I think crude oil kind of did its sympathy bounce off those 57.40 daily unfair lows, and just don't have a lot of direction on crude oil right now, but my bias is still towards the upside. I'm still looking at stops below 57.40. Again, XLE not showing the excitement and the internals that we want to see there, but again, the XLE getting back above 79.11 and having a close above 79.11 will be pretty powerful for that ETF. Let's go back into the scanner really quick. We want to take a look at Weyerhaeuser. We were talking about that earlier. And sitting on, and let me just pull up the scanner here. Boom. Weyerhaeuser. See that bottom right there? This is letting you know that we're kind of at the last border here for Weyerhaeuser. Hadn't been a stock that's been on everybody's, rosiest long situation radar screen since the first of the year. So again, showing that relative weakness. Let me just see where we're at this morning. Trading 31.46. So again, kind of getting below those weekly unfair lows. I think we've come a pretty good ways pretty quickly on Weyerhaeuser, and right now, I'd want to wait and see a little bit, see if we can get up. I don't know what I just hit. I have no idea how that pops up. Click here. No. Well, we're going to have to deal with it. Got a paper trading little thing up on our chart here. I don't know how that came up. I'll try to figure out how to get rid of that later. But right now, I kind of sit tight on Weyerhaeuser, even though we've put it on our short situation here. This is going to drive me nuts. Let's see if we can get rid of this. Well, next break, we'll take a look at it. Here we go. You know what? I got to fix this right now. Sorry, guys. This is going to drive me crazy. Yeah, I've got. Guys, I apologize. We'll just have to live with it. All right. So, anyway, going back to our scanner, we're going to go back to a couple of the usuals. T. Rowe Price Group. I mean, TROW. Let's take a look at that one. See how this has panned out. Come on. Fixed it. We fixed it. All right, so T. Rowe Price Group, we've been kind of hovering and waiting. This was on the daily below the box situation weakness. 81.36 is now where you can orient stops. But let's take a look at this. This is kind of why we had been looking at this, and it's kind of holding true. The theory's holding true. Stocks that were not cooperating with any type of market move up are now falling relatively quick on these pullbacks. Let's take a look at the scanner again. And we're going to try to figure out, let's see, Whole Foods, that's the one I was really wanting to look at. WFM, this is one we've been taking a look at in the past here. So here's the weekly situation on Whole Foods. 50.76 had the breakdown, kind of couldn't get back and even retest that 50.76. We kind of used the dailies to regulate it down, had another breakdown below 41.83. We talked about this the other week, or last week, in fact. You want to trade the breakdowns. You want to trade the resistance areas when they're, put to you. And as we look at these, somebody told me a long time ago, successful trading is supposed to be boring. I know that, you're not trying to find the high with this type of, mindset on trading. You're not trying to, stocks that are way up in the sky, like the Shanghai the other day, it pulled back. I mean, what was it, 7-8% in one day? A lot of times you're not going to get that type of action. The stocks that are flying super high that can reverse pretty quickly. But this is it's a time-tested, in my opinion, very true way to look at the marketplace to find stocks that are showing their hand early. And you may not get, a completely meltdown type move in these stocks that are already down. But the theory is, and the way I always look at these markets is, you want to try to not get yourself into a pain amplifier. And that means that you don't want to, you always want to look at, what's the downside if the market continues to go north, where the high flyers a lot of times are going to squeeze people that are trying to short them much, much higher than these stocks that are showing their hand early. So that's the theory. And, you know, Whole Foods, again, not the most exciting short in the world, but allows you to go to the register and take a couple of dollars out every day. I'm not going to complain with a situation like that. All right, let's take a look at the Russell really quick. And I'm going to have to go over here to the, I don't even know if I got the Russell future. Let me see. Excuse me. Let me just make sure what we're looking at here. Jay, do you happen to know the Russell futures symbol? I don't look at the Russell too often. All right. Thanks. All right, and we don't do breadth calculations on the Russell right now because that's a lot of stocks, and we just haven't put that in the hopper yet. That's going to take a ton of server resources to calculate that one. Let's take a look at our daily situation. You know, I mean, talking about a relative strength trading system, that alone, I would stay away from this on the short side. This is one index that's not been doing the customary pullback here. And if we have any types of rallies in the broad market, taking a look at the Russell above 1260 and he closes above there, you'd have to pay serious attention to it, just like we did last week for a while there. But again, I'm not looking at this as the best short candidate, if that's what you're insinuating here, that it might be a decent short. I think you got better candidates than that one. All right, going back into our scanner, just to pick a couple of instruments up that we can kind of focus on here. We're gonna look at PepsiCo really quick. That's one flashing bottom here. Now, I think the Russell, as an overall market indicator, I mean, obviously it definitely plays a role in the 30,000 foot view. The Russell was a good relative strength trade for a while. We were talking about it, I think, last summer. But again, I think you got a lot of bang for your buck right now. Just taking a look at in my opinion, the breadth situations on the S&Ps and the NASDAQ and some of the other indices of the world, and just trying to look at those as leading indicators to try to use the inflection points on the profiles within those indices. You can get a little mixed up sometimes looking at, what's the best index as the latest flavor of the month to try to guide the market higher or lower. Call me simple, but I'm just kind of strictly looking at the S&Ps right now because. You got, in my opinion, you got one of the best indicators out there right now rolling over to negative, and we haven't seen that since October last year. So we'll take that at face value. Here's PepsiCo on the weekly. Again, in a lot of situations, I'd be looking at this as a buying opportunity on PepsiCo, but since our breadth is a little screwed up here, I'm gonna say that might be something to pass on. The internals of the markets are starting to turn a little bit here, which haven't happened since October, and I'm not gonna be looking intensely to buy stocks right now. I'm gonna be looking to sell rallies. And right now, PepsiCo, again, looking at our daily situation, you probably got better shorting opportunities out there than this one, but if we get some closes below 93 here, I think I'd put this a little bit more on the radar screen as one of the top stocks on the list. Let's take a look at Pulte Group, PHM. This has been something we've been talking about, PHM. Started rattling around below these profiles. Now we're below another one. Stops can be oriented above 1958 on this stock. I think we could head a little bit lower. Let's take a look at Priceline. PCLN. We had a call about this the other day. I haven't looked at it. There we go. It's coming up. Get up here. Okay. I think we had someone call about some options on this particular stock. I mean, we talked about, maybe it wasn't. Sorry, guys, I'm having problems with the charts here. Are you guys still seeing me? All right, my charts are frozen here. Maybe not. Okay, here we go. All right, Priceline. Had a caller call in about this. Maybe should he hold the calls? This is a really good example, I think. To look at that relative strength trading environment, and we were looking at the S&Ps as kind of like a little bit of a guidance system to look at all stocks. And the reason we were looking at that with that disconnect in place on the S&Ps with the breadth internals is that, this case in point, like Priceline, hey, it's not a terrible situation to buy calls on, but the market, more than likely, from the way we were looking at it, it wasn't in a ripe situation to drag things up higher with it, namely Priceline, namely Walmart, namely a lot of stocks. And case in point, it did drag a lot of stocks down. The broad market did. Priceline was one that was not in a terrible situation. But again, it kind of didn't cooperate. And, that's kind of why we're looking at that relative strength trading system as a way to try to, make sense out of weak stocks and strong stocks relative to the market. Priceline, we talked about maybe not holding on to the calls, taking what you had in it, and walking away from the table. Really good case study on that. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartly's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're kind of looking at stocks that showed the relative weakness versus the S&Ps and some of their sectors. Murphy Oil, this one has just been on the dog list, and I'll be honest with you, this is again near-term lows. Stocks on their lows go lower, stocks on their highs go higher. This has been on the I mean, if you're watching this show, here's Murphy Oil down here. It's just a sea of red and nothing else all the time. Let's take a look at Kohl's, KSS, L3 Communications really quick. L3, LLL, Kohl's, KSS, LLL. There we go. All right, as we look at this one, again, below the box, gave you some really good selling opportunities, 121.11 on L3 Communications. Again, that profile appearing, I mean, again, I cannot say this enough, profile appearing above price action and profile appearing below price action, vice versa, appearing above price action is super bearish. This is our long-term weekly on LLL symbol, L3 Communications. Got about a 6.7 point drop from those weekly unfair lows after we retested. And now we've got some retests on the daily. So again, this might have a little more juice in it on the downside, especially if the market internals are correct on the S&Ps in general. Let's take a look at Kohl's. Come on. Come on, mouse. Run faster on the wheel. Oh, my goodness. We're stuck here, guys, I think, on E-signal. got so many things going on in this server bank here. All right, let's go back. Let's get some updates on our currencies, see if we can get those to pop up. Here we go. We're going to come back to coals. Seems like eSignal might be having some line issues to some of the exchanges. Currencies, no problem. So here we go on the euro. This is one we had on a radar screen to short below 112.25. If we get back down below that, that happened. Now we've got a retest situation. We've reached a high today already of 112.05. So looking for a little bit more higher movement here to get an optimal short opportunity around 112.25 on the euro. Still bearish on this product in my book. That's the situation on the euro. We're going to take a look at the Aussie dollar. Now, this is something we've been very bearish on and trying to sell rallies. I love how this thing is just compressing down into this 6 area now. Look for breakdowns below 76 on the Australian dollar. Might be a great shorting opportunity, and then being able to place stops above that 76 area. Take a look at the Canadian dollar really quick here. Snapping over to this. This is, been one that I've been looking to buy support, buy breakouts on. The weakness of the Canadian dollar, 123.68, new buy point on the Canadian dollar for any pullbacks. Came off the unfair highs on the daily. This is our daily grid. In my opinion, buy opportunities 123.68 on the Canadian dollar. Haven't got down there yet. Getting close though. Trading 124 pre-market. I've gotten as low as 123.90, 91. Getting close. No cigar yet though. Guys, you've been great. Hang around. Larry Pesavento is next. Watch all the posts on TFNN today. Get your week started on the right foot. We'll be right back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.